Hey, everybody, welcome to HBK Provident Advisors Friday Live. This is Friday, November 4th, 2022. I am Brian Peluso, and one of the advisors and partners here at HBK Provident Advisors, and I'll be hosting. And of course, I have with me Laura Wider, who is in our Pittsburgh office and is a planner as well. And we almost always have, Mike Kutch.
I take off 1 week.
Mike is everybody needs a break once in a while, right? Mike's a chartered financial analyst, and he's going to be giving us some market commentary. A couple things we're going to cover today. First of all, Laura will not be with us next week. We've been thrilled to have Laura on the last few Friday Lives, doing a wonderful job, bringing great commentary. And she will today actually give you a year-end checklist, things you should think about doing before the end of the year. But she's not going to be with us next Friday or the Friday after. And why aren't you going to be joining us, Laura?
I'm very sad to miss out on the next couple of Friday Lives. I'm very happy to announce I'll be getting married next weekend. So
next Saturday.
Yep, I'll be out for a couple of weeks.
Well, you can still be working on Friday and get married on Saturday. I don't understand. In any case, hey, just a reminder, nothing that we are talking about should be construed as a specific recommendation for your situation. These are ideas, thoughts, suggestions. You absolutely need to consult with a qualified financial, tax, and or legal professional for your specific situation. These are thoughts, these are ideas, these are our observations. They are not recommendations for your specific situation. I do have a trivia question that I'm going to answer at the end. There was a very important moment in United States history that happened on this day, November 4th, 1979. It was all over the news. It was the news for an entire year, starting in November 4th of 1979. And I would suggest to you it was one of those moments that absolutely changed the United States standing in the world, and ultimately the United States foreign policy. And it started on November 4th of 1979. I'm going to answer that for you at the end of Friday Live. So what happened on this day in 1979 is our first kind of topic. Now, Laura, there's a whole bunch of things that we should be thinking about, right? We come to the end of the year and everybody says, oh my gosh, there's so much to get done. What should people get done in their financial household?
Absolutely. So another checklist for you guys. The first one on the checklist is to establish or contribute to your retirement accounts.
Yeah, absolutely. If you haven't done that, you still have time to do it. So for many of those workplace retirement accounts, you need to get that stuff in by the end of the year. IRAs generally have until April 15th. But for workplace plans, you really need to get that stuff in there.
Yeah, and you definitely want to make sure you're at least contributing the match that your employer is matching. So always good to double check that and make sure you're getting that match and putting your own money in as well. Next is your RMDs. We talked about this a few weeks ago. Take your RMDs. Those you cannot take before tax time. You have to take them by the end of the year.
Yeah, absolutely. And if you do not do this, it is one of the, if not the most onerous penalty in all of the tax code. If you don't do it, the penalty is 50% of what you should have taken out. So again, work with your qualified financial professional. It's based on the calculation from value of year end and your age. But if you don't take it, if you miss it, very hard to give an oops to the IRS.
Yeah, that's a tough one. Next one is pay expenses for your itemized deductions.
Yeah, the standard deduction is so high right now. There's very few people that are able to itemize deductions any longer. However, if you do, you want to get those expenses in now. You want to pay those things down so that you make sure you have those items to give your qualified tax professional if you are itemizing. Very few people do. But if you're going to do that and there are expenses that you're going to be able to put on your tax form, do it now.
Yep. Next one, make a tax-deductible charitable contribution and annual tax-free gifts.
Yeah. So if you, if you want to be able to give for, obviously for the goodness of the charity, you'll want to be able to give away money. But if you're going to do that and you want it to help your taxes, you got to get that in by the end of the year. The tax-free gifts as well. Of course, you can give away $16,000 in 2022 to anybody you want, and it's not reportable to anybody. That's per individual. So if you plan to do that, which, by the way, if you do it right and integrate some things, helps out with your RMDs ultimately because you got less money. Anyway, long story. But if you want to give away money to folks, whether it be a charity or to individuals, you only got, what do we got, about 2 months to do that. So get that teed up and get that rolling so that it can benefit you and those charities and individuals.
Thanks, Brian. And, this one might confuse people a little bit. So why don't you talk about why selling stocks might be a good checklist item for this year?
Yeah, so we've been doing that with a lot of the folks that we work with. It's making lemonade out of lemons. Of course, the lemon is the market is down. How do you make lemonade out of that? It is quite possible that when the market is down, if you have a capital loss would be if you bought something for $10 and it's only worth $8 and you sell it at $8, you have a capital loss of $2. You bought it for 10, you sold it for 8, you lost $2. Well, that's bad news. Nobody likes to lose. However, it could be possible that you do this tax loss harvesting. So you lost money, and what you could do is either in this year or in future years, again, I want you to talk to your qualified tax professional on this, but if you have that $2 loss, you can either use that loss against a gain this year, match that. Let's say you have a $2 gain somewhere else, a $2 loss here, you match that, 0 taxes, right? In theory. And if you don't have any gains this year and you have a $2 loss, you get to move that next year. And you get to hold that and you get to roll those forward. So you match gains and gains together. And then if you have anything left over, you can actually use some of that against other income. So it could be possible that although, the lemon is the market right now, Mike will talk about it and he's going to tell us whether it's going to be a lemon or a cherry next year. But you make the lemonade by saying, well, it is what it is. I'm going to harvest some of these losses. I'm either going to use them this year. I might be able to use them in future years to offset other income. Well, Laura, that is fantastic stuff.
Well, I have one more, if you don't mind.
Dude, I don't mind at all.
All right. This one's a doozy. Set your clocks back on Sunday. It might be the last one. So, make sure you're not late to all of your appointments on Sunday.
Oh, yeah, that's right. Well, so thank you. I needed that reminder. Actually, I hadn't even thought about this. So much stuff going on. The last thing I was thinking about is, midnight, I guess it is, set the clock back. So, well, I don't know, Mike, maybe we could set the clock back to, last year, the year before. Maybe we'll set the clock back to, the mid 80s when the market went straight up. Hey, why don't you jump in and give us your thoughts, let us know what's going on.
Yeah.
Good, bad, or indifferent.
All right. Hello, everyone. And I'm glad to be back on Friday Live after my week off. It was a pretty busy week in the economy, and it caused equity markets to decline lower by a few percent. We got the ISM manufacturing and services. Both saw declines for the month and hitting their lowest readings since the spring of 2020. However, both remain in expansionary territory above that 50 reading. That's especially true for services that has a bigger margin. Now, we are seeing certain metrics of manufacturing in that below 50 mark, but referring to the ISM, we're not there yet. On Wednesday, this was really the talk of the week. It was Fed Day. Now, the market initially rallied on the
and who doesn't love Fed Day, right?
I love Fed Day. I like it better when the market rallies after, but initially the market did rally, and that was mainly because they talked about they're going to consider all the rate hikes that they've done already and highlighted the fact that their policy works with a lag. So the market interpreted that as, we're going to start seeing a slower pace of rate hikes. Well, that quickly reversed when Powell started speaking. Although he did make some remarks about slowing the pace of rate hikes as early as next month. So we could see a 50 basis point next month and end this high string of the 0.75%. But that was overshadowed by his comments about likely having a terminal rate higher than they were anticipating in September. And that range in September was 4.5 to 4.75%. So we could very well see a 5% handle on the Fed funds rate, but we'll have to see in the coming months how the economic numbers progress and especially inflation. We then heard a hawkish rant from Powell after one reporter mistakenly said that the equity and bond markets were rallying on his remarks. Well, he went on the most hawkish highlight reel I've ever seen. If there was any question earlier,
absolutely fantastic.
If there was any question earlier in the year that the Fed would try to kill any rally in the market, well, that was answered on Wednesday. It's not really that they want everyone to fail, but since the main problem is inflation, if markets go up, people tend to spend more money and prices continue to rise. They also made some comments that they would rather over tighten, meaning raise the rates too high and have to cut rates after that once the economy pretty much enters a recession, than letting those inflation expectations become unanchored. I'll wait for the phone to ring. For everyone new here, please silence your cell phones.
My bad.
I'm just kidding. And then we got the jobs report today. So nothing I saw will derail that message that we got from Powell. Although job growth is decelerating, it is still the labor market's so tight. It's very strong. Wage growth increased at a higher pace than last month, but on a year-over-year basis, we are seeing a decline. So that's down to 4.7%. So that's going to continue to be a drag on consumer spending going forward because, as we've seen, inflation is still around 8%. So everyone's purchasing power keeps getting diminished each month. Participation rate, which the Fed really wants to see come up because that'll kind of put a cap on the wage growth, that came in lower, unfortunately. So that's signifying that people just aren't entering the labor force as fast as they used to. And we saw that in the job openings earlier in the week. We had a surprise to the upside. So that really needs to come down. So just to summarize on the economy is slowing, but not enough for the Fed to back off at this point. So does that mean we're still going to get a midterm rally, post-midterm rally? It's still a decent chance we will. Fourth quarters tend to be very good for the stock market, especially in midterm election years. To talk briefly about that, markets love getting some of that uncertainty to decrease. So regardless of who gets elected, they'll just like the idea of being able to establish a plan based on the current administration. Now, there is a greater chance that the Republicans will win at least one of the sections of Congress. So that'll create gridlock, which the markets really like. That'll put a cap on government spending, and really take away the chance of a rate hike in the next couple of years. Until a new president is elected. So overall, if we do get that rally over the next couple of months, I'm likely going to take some equity exposure off the table just because I think we'll have a reset in first quarter of next year. But on the flip side of that, if we just kind of trend lower in the coming 3-4 months, I'll likely be a buyer at that point and add to our equity position.
Nice. Well, there was certainly a lot going on. I did particularly enjoy Jerome Powell's rant. It is worth a YouTube view on that. Mike, thank you for the commentary. I'm going to wrap up real quick with what happened in 1979. And so for those of you who did not cheat by looking on your phones or on the internet, on November 4th of 1979, of course, is when a group of students who were advocates and soldiers of the Ayatollah Khomeini overtook the embassy in Iran. It was the beginning of the Iran hostage crisis. It was November 4th of 1979. And for those of you who remember it, it was a really, really terrible day. It lasted for 444 days. 444 days, we had 52 Americans held hostage by a relatively small country in the Middle East and couldn't figure out how to get them out of there. It really did shape much of our world moving forward about how people around the world felt about the United States and some of the big things that have gone on since then and how the United States interacted with the world. So that was a huge day. Now, if you go back to November 4th, so it's the end of the year, you're getting ready for Thanksgiving and the holidays, the market had done pretty good. We essentially had a lame duck president. Nobody really thought that Jimmy Carter was going to get reelected, and he ultimately didn't. And now we've got a group of students who are taking over our embassies. Oh, my good heavens. Lame duck president. Huge inflation in 1979. And now we got hostages over in the Middle East. What would you have done? You should have sold. It's terrible. 1981, the market was up over 31%. Really can't say. It was an interesting time. But if you're sitting back and saying, we've got, president, or we got Congress, or I hope they all get reelected, or moved out, somebody else gets elected. Things around the world are insane. Nobody respects the United States anymore. That happened in 1979. And guess what? We ended up to be just fine. Hey, Laura and Mike, thank you for the commentary. As always, Mike and I will be back next Friday. Laura will be off doing off wedding stuff. The week after that, she's going to be off on her honeymoon. So, hey, everybody, get out and vote. Get out and vote. Whatever your voice is, let it be heard next Tuesday. And have a wonderful, wonderful weekend.
Bye.
Bye.
Bye now.